Hello dear friends, today is the 19th of December 2022. I hope you're all good. Yesterday was my birthday. I just did some posts in the forum answering some of those questions by implied odds. I think the member was named. And he did this wrong trade and explained why it was wrong. And in this video I would like to summarize it face to face. Here you can see my posts, yeah? So let's go through the Australian dollar example, okay? So this trade was not a long trade at all, okay? Not at all. And the reason for that is, so the price was near the upper for our channel, so it already had reversal energy down, okay? We only would consider to buy the dip in such a scenario if we have an ongoing squeeze, okay? And there's a big squeeze going on and shorties are coming in and we are buying the dip against those shorties. This was clearly not the case here, you see? The squeeze threshold line has not been reached and the red line is actually downward sloping even. Those shorties are old, and that's the second big mistake. Look, they are far away. This shortiness is far away. They're already in loss. The price can come down here without a problem. So this was definitely not a long trade. If anything, it was a short trade for advanced causality traders. But even then, it's not worth a lot. Why? Because we do not have a proper money switch. That's a big minus. And secondly, we don't have a nice target neither. Okay? But as you can see, and as it happened, look, the high has been cleared. Even here, there's been a little retest. We are near the upper band. And of course, the price came down and visited the shorties. And even this whole thing resulted in a long squeeze and went down against longies later on, as you can see from the session we posted yesterday. Okay, another minus. There is no nice target nearby. This small MTS is far away. And above all, look, we have old longies in the way. So why should the price, just go up from here and let those longies win? Okay, there is no big flow. Look at the scale. These are old shorties. They are down here. Okay, so the price came down. And advanced traders may have done this as a 4-hour reversal setup. Okay? But they would have decreased the leverage because, as I say, there's no proper down money switch. There are no green bars yet. And secondly, there are not nice targets to trade towards. Okay, so it's tradable, but it's not worth a lot. Certainly, we don't buy, however. Okay, so the beginner mistake is to buy into a 4-hour reversal. On top of that, you can see that the upper moving average on the day chart has already been kissed. You see, these highs have all been taken out. And then we have the longies in the way. So, of course, the price came down. Yeah. Those shorties down here are far away. Okay, they can be visited, no problem. There's no ongoing squeeze. Okay. You can see that also on the 1-hour chart. We even have a short-term stop as a target below. No squeeze, okay, and even medium-term stops and long-term stops below the price here. And these were taken because these up moves, it's after the main stop hunt, okay, which happened some days before. Those shorties have been reduced. There are no new shorties coming in. Never ever buy in such a scenario, okay? So here I wrote a summary, okay? Pros, big MTS have been, so that's for the short trade, okay? The Aussie short trade. What are the pros? The big upper MTS have been taken out. The previous high has been cleared. The day chart moving average has been kissed. There are old longies above the price. There's a short-term stop below the price. The money flow decreased. The price is near the upper for our band. There's no ongoing squeeze. Old shorties are far below the price. There are no stops nearby on the upper side. Downward sloping squeeze line. Okay, cons. There's no proper money switch. That's what we would like to see for our trade, which is worth more. There's not even net loss reversal, and there are also not good targets below. Okay? So don't worry, it's a simple beginner's mistake, but now you know it and you won't do that mistake again. Okay? Then there was a second trade. in Kiwi. Okay, this member did. So that's a different scenario, so let me explain that. So, okay, look, shorting Kiwi with this market structure, as I said, is not a crime on the day chart, okay? The price on the day chart came up so much, we have a proper V pattern. The previous high has been cleared, as you can see. The moving average on the day chart has been cleared. Above the price are longies, okay? So we have some moving averages below, so these can be targets. So to expect the price to do a breather down is no crime. We even have a bit of dumb money flow, only 4 on the scale, so not much, but at least some dumb money longies. There's just one big minus on the trade, which is there's a small short squeeze going on. And that means that the market is highly sensitive towards new shorties. If new shorties come in, there can be a proper squeeze and then an up move. Even those longies can win then. You understand? Very important to understand that. So that's why this trade is not great. Apart from the fact that, again, we don't have nice targets. We don't have strong flow. And look, we even have right now expanding shorties while longies leave the market. That's not great. So again, the same thing. An experienced causality trader may take this trade, but she would not risk a lot of capital on the trade because the value is not great, the quality. Yeah. Here you see. So I've posted this. High has been cleared, long is above the price, MAs below the price, some flow. However, some squeeze is going on. We are above the threshold line, the cutoff line. That means the market is highly sensitive to any shorties that come in and can go up once more. Of course, if longies come in, then you know it may move down to this moving average and it's valid. But that means, look here, I wrote the summary. Pros, cheap entry on the day chart. V pattern on the day chart, the high has been cleared. The moving average has been cleared. The long is just above the price. At least some longy flow. Some moving average targets below. Cons, cardinal sin, okay? Trading into the wrong side of the squeeze. Never ever do this, especially if you're a beginner, never ever do this, okay? Don't trade against a squeeze, even if it's a small one and a weak one. Okay, it's a dangerous situation because if some shorties come in here, you need to immediately get out. Okay, and then longies are just leaving the market. That's also not great. You don't want to see that. That's a minus, so there are no stops nearby. Fine. Okay. So very simple. As a beginner, do not do such trades. If you're advanced, yes, you can take the trade. Don't risk a lot and observe it. If shorties come in, you want to get out. If longies come in, you try to ride it. Okay. And by the way, if so, this then can be traded on the day chart. Look, you would place your own stop up here, okay? Above all these longies and above the high with a buffer. And your target around here. So, you know, to at least take this moving average. So it's somewhat balanced risk return. Not great, but doable. And you calculate what lots you would risk for very low risk trade. So not a lot, okay? I hope the summary helps. But look, I mean, you're in a good way. Don't worry. You know, if you're new, you need, you know, you do these mistakes and you learn from it, and you will never do them again after those explanations. Okay. You know, but don't trade live. Okay, you're not at a stage where you can trade live. You need to demo trade because these concepts need to be completely internalized. Okay, like these were rather beginner mistakes. Okay. So continue studying, demo trade, learn, and now and then I will always try to explain and go to the forum and try to explain these points so that everybody can learn from them. All the best, lots of love, stay safe.